Do you think that the Fed's moves will have an impact, at least on the economy in the longer run?
It certainly will have an impact on the economy. I think Chair Powell said it perfectly when he said, look, monetary policy, it can't cure a virus, it can't fix a broken supply chain, but it can provide support to business and household sentiment, and it can continue to keep financial conditions accommodative. So, yes, I don't think it's a sufficient condition to support the economy out of this likely pending recession, but it is a necessary condition and will probably make it not as bad as it might have been.
Okay, and Bryce, people have made the point that that might be true, say in the next couple of months, a month from now, 2 months from now, 6 months from now, but for right now, businesses face a cash crunch. So on that count, is the Fed doing enough to help here, or is it really the government that needs to step up with more?
Yeah, I think it's really.
Well, I think the Fed did need to.
Bryce Doty, go ahead.
Sorry. Okay, thanks. I think the Fed was right to hit the panic button and flood the markets with cash, because there is a massive need for cash on all levels, both individuals taking money out, running the bank types of cash, but a bigger problem in bonds is liquidity. There's very few bonds even trading right now. Even money market type bonds are trading poorly, if at all. So they need to address that liquidity in the biggest way possible, which they're trying to do. But again, you're correct. It doesn't really solve the underlying problem of the virus, and people can't. Well, if we have school break for 3 months in the summer. Let's take one of those months and do it right now. Close all the businesses right now. Rip the Band-Aid off. Take the pain, the economic pain right now, to save bankruptcies and job losses and deaths down the road. And if we did that, the stock market could at least try to quantify what the hit to earnings is going to be. Right now, it's so vague. You don't know if this thing is going to stretch on for 6 months or 2 months. And so that's why we see this intense volatility.
Sure.
Until we get serious about dramatically slowing the spread of the virus, you won't find a bottom in stocks.
Neil, the problem with doing that, with saying, okay, we're going to take all of the economic pain right now, is that it will put some companies out of business. I mean, it will push workers to the brink. So you want that reassurance that there's going to be some kind of backstop. I don't know the best way of channeling that, especially to the point Bryce was making about there being no clarity on earnings and so forth. What are your thoughts both on the right medicine for the economy here and how to invest?
Well, I think, first of all, we have to remove emotion. Kelly, I've always said if emotion enters a conversation, at some point in time, it's going to get ugly, and I've been there more than most people. And the same with the financial decisions. You look at what the Feds did yesterday. I mean, it's sort of like, why involve emotion? We are going to have casualties, especially in the small business arena, where they don't have the cash flow, the bars, the restaurants, small businesses. We have to somehow try and figure out what we can do there. But there are going to be casualties. But as you notice all day long, all these companies that are shutting down are saying, well, we're going to pay our workers. We're going to keep trying to keep them on the books. This is a situation where apparently we haven't hit before with this new virus. But the bottom line is, underlying the economy, the fundamentals were very strong. Look at the S&P 500 companies. They're sitting on over $5 trillion in cash. There's $3 trillion in cash in money market funds and building on a daily basis. Back in 2008, there were underlying financials that were deteriorating. This isn't so today, Kelly. In fact, the market goes down 2,000 points, and it's not even a headline.
So, Neil,
I mean, it's
you're right.
Crazy.
Once we go down 30% peak to trough, there's plenty of headlines. So let me ask you this. Are you comfortable keeping your clients' money, fully invested in the market? Are you taking any additional moves because of some of the sell-offs that you might not have done before, or are you going to wait and see how this all plays out?
No, I think being fully invested, you're fine. When you look at a 30-year Treasury at 1.4, or you look at the Dow Jones yielding 3%, it doesn't take a genius to figure out what's going to be better in 30 years. But essentially, these companies have been cut in half. The banking sector, Kelly, is as strong as I've ever seen it, and they're getting crushed. So at some point in time, it's going to turn. Remember, in the last 38 years, there's only been 6 down markets. And on average, those down markets were down 10%. 32 of those markets were on the upside. And on average, Kelly, the upside was 18%.
Okay.
So just don't panic and sit and buy quality and you'll be fine.
So, Daniel, let me bring you back into this on the economics of it. I saw a number, and I'm curious what your own numbers are from Goldman over the weekend. They think the economy is going to shrink at about a 5% pace in the second quarter of the year, which hasn't even started yet. So we're talking about April, May, June, and then a rebound. You guys, as far as you can tell, what's the economic hit going to look like?
Yeah, no, that's a great question, and we're all trying to peer through the fog of war here and trying to understand how much the economic hit is. I think Q2 is looking out to be a pretty severe contraction. I don't think we see a rebound quite as strong as what Goldman sees in Q3, but it does bring up the broader point that all that markets are reacting right now is just the fear of the unknown. I think now we're starting to get a handle around what are the known unknowns on all of this, but there's still a lot of uncertainty. It's not going to be for a few weeks yet before we even start to see in the harder data what the actual economic impact is. And the real big question of all, how resilient is the economy going to be from all of this? We were going into this crisis on a fairly strong footing. Is this virus ultimately going to be a 3-month sort of duration shock that the economy can absorb, or is this going to spill over into longer that may cause deeper pain?
All right.